Hey traders, this is another video that will show you a very simple strategy that I use to make money every single month trading forex. This strategy is a strategy that I have used several times to make money every single month. This strategy follows price action and market structure, and it is very simple to implement. Even a beginner trader can implement this and start seeing profits on their account. Now, this strategy follows the trend and it follows market structure breaks. I'll show you that just in a moment on the charts. But before we go any further, I have opened the VIP signals that cost only 35 US dollars every single month. If you're interested in receiving high quality VIP signals for your trading, contact me with the WhatsApp number that is in the description of the video or the first pinned comment of this video, and then we can discuss how you can make your payment and start receiving the VIP signals. So without wasting any time, guys, give a like on the video. Let's get started. So here we are on the charts. I'm using GBP USD here on the 1 hour chart. This strategy can work on any time frame. You don't have to use the 1 hour chart. You can use this on the 1 hour chart, 15 minutes. You can use it on the 5-minute chart for scalping. It will work throughout. Okay, so first things first, guys, this strategy is based on market structure. Market structure is the higher highs, higher lows, higher highs, higher lows, or lower lows, lower highs, lower lows, lower highs. That is market structure. And it is also based on price action. Price action is the action between buyers and sellers. The candles print price action. Bullish candles, bearish candles, that is price action. So we are going to use price action, market structure, and we're going to combine that with the patterns that the price action produces for us to get entries in the market. So let me show you guys an overview of the strategy before we get started. So this strategy is so simple that it uses just the basic knowledge of trading. Market structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, okay, in an uptrend, or a low, a lower high, a lower low, lower high, lower low, something like this. This is the market structure we are looking for in this strategy. Now, this strategy is very simple. You're going to trade continuations and reversal patterns using this strategy. So what you do is whenever you see the market trending to the upside like this, okay, you want to mark the high, okay, the high. If it is creating an uptrend, mark the high like this area right here, okay, mark the high and project it forward. So the market usually will pull down from the high and go and break it. Once the market breaks the high, don't jump into the trade. Remember, I told you that in the first video that I showed you on price action. Don't jump in a trade once there's a breakout here. Don't jump in on a trade here. Don't do this and put your stop loss below that area because you may get stopped out, okay? What you want to do instead is you want to wait for the market to pull back, okay? To pull back near this market structure break area or below it, preferably below it. Then you look for candlestick formations around there for it to go long. You only want to go long after there is a pullback like here, and then you will put your stop loss just near that low that was created, and then you target a 1 to 2. This strategy will give you a very, very high win rate. So what I always do is I wait for a market structure break and then a pullback below the area where the market broke the structure for a continuation pattern to go bullish if I am trading in an uptrend. Now, if I'm trading in a downtrend, the reverse is true. I look for the most recent low and then I draw on there. If I see the market break that structure, I don't jump into a sell right here, okay? Because that is dangerous. Don't jump into the sell there and then take a trade and then hold it like this, okay? Yes, I can win this trade. It's possible to win this trade, but it will be painful for me to hold this trade. What I do is I wait for market to pull back up to a level where the structure was broken or near it. Then I look for bearish engulfing or bearish candlestick patterns around that area. That is price action to support that trend continuation to the downside. So I wait for this pullback right here, and then this is where I enter the trade. Okay, after there is a structure that has shown me the continuation here, then I want to take a 1 to 2 risk to reward ratio. This is the strategy in a nutshell. Now, I am going to show you the reversal side of it, okay? For example, here, if this market is going up like this, and then it goes down, creates a low, a higher low, and then after that, it comes down and breaks this higher low. I only wait for it now to pull back near this higher low which was broken for me now to trade a reversal in this format right here to the right. So this trade here represents this kind of downtrend trade, okay? It is a reversal trade from a bullish trade to a bearish trade, okay? This market here was trending to the upside. Now, after there is a break of this higher low, okay, I wait for the market to pull back up to that area, and then I look for shorting opportunities around this area like this, okay? This is the strategy in a nutshell. This same setup right here is shown here on a bearish trend. Now, if you're going to do a bullish one, right, a bullish reversal, you just wait for the market to create a high like this. Wait for the market to create a high and then create a low, then come and break this high right here, okay? Once it breaks that high, wait for it to give you some sort of a pullback near the breaking point or below it preferably, and then you jump in on a trade for a reversal to go long. So you wait for the market and then take trades around this area, putting your stop loss at that structure low. Okay, so this is the area where you are going to wait for the market to pull back into here for you to take your trades around there, and then your stop loss is around near that structure low, and then you target a 1 to 2. So this is the setup that I always look at for a continuation trade or a reversal trade, either bullish or bearish. So let me show you guys this on a live chart, and I hope you guys are following along. If you're following along, leave a like on the video, subscribe to the channel, and let me hear your comments in the comment section down below, guys. Right, so let me remove all drawings right here, okay? Let me remove the drawings so that we go on the live chat and we look for some of those examples, okay? We look for the examples. Now, let us look for examples first in a bullish trend, okay? We look for examples in a bullish trend, right? So, we are looking at this area right here. We have a low, we have a high right here. We have a higher low higher than this, okay, right here, okay. And then we have equal highs, okay, and then we have a higher low. Now, what we are waiting for is the market to break out, okay, break out of this previous high right here, okay, break out from this previous high, and then we wait for a pullback for us to enter into a trade. Now, these look like equal highs. Yes, indeed, they are equal, relatively equal. But if you look at it clearly, okay, you will see that there is that wick right there that breaks above this high. So this becomes a higher high, higher than this previous high. So once this is broken, okay, once that is broken, what we do now is we don't just jump into a trade right here, okay? We don't jump into a trade up here because this high has been broken. We wait for the market to pull back. So in this pullback here, this area here is where we're going to be looking for candlestick confirmations to go long around here, okay? So we look for candlestick confirmations around there to go long. And what do we see here? We see a morning star formation, we see a bullish engulfing, we see 3 white soldiers. Those are all candlestick patterns that confirm a bullish continuation trade. All right, so here in this case, I would see this bullish engulfing for an aggressive entry, or I could wait for a confirmation with 1, 2, 3 white soldiers right here, and then I could enter on the 3rd soldier, put my stop loss below this structure low, and then I'm targeting a 1 to 2, just a 1 to 2, and this trade would have played out perfectly. Now, it does not always happen like this. Sometimes it plays around, it's choppy, then you have to wait for some time for it to move into profit. But generally, if you follow all the steps, this should really help you out with your trading, guys. So let me show you a reversal. Okay, let's see a reversal. So here we can see, let's look at this area right here for a reversal. So here we see the market goes up, it comes down, goes up, it comes down. Okay, it goes up and creates a lower high, lower than this one here. Okay, and then it breaks this low right here. It breaks this low right here. Okay, but it does not pull back into that area. Okay, let me just show you that. This is the low that was broken right here. Okay, that was the low that was broken, but the market does not come back near that low. Of course, it does come back in the future right here. It comes back to that low, but does not give us a continuation lower. So here, if we took a trade after this pullback, and then we see 1, 2, 3 black cross, we took a trade right here, and then we placed our stop loss at that structure high and targeted a 1 to 2, like a 1 to 2, this trade would fail. Okay, remember that these trades or this strategy is not like 100% accurate. You're going to get like a 70% win rate. Okay, but generally follow the rules. Now let me show you what you are going to do here. You see, after this trade fails, okay, you continue following the structure, creating high, lower low, lower high, higher low, higher than this one here, and then it creates a higher high right here. Okay, creates a higher high, higher than this high. So you wait for the market to pull back down. Okay, to pull back down here for you to trade. But remember, this area you've already taken the trade, so you're not going to consider this setup because you're here. You'd be already in a trade that we had just looked at during the pullback. Okay, so we continue drawing our structure, creating higher highs and higher lows now. So this one is after this trade. The market pulls back down here. It goes up, creates a high, okay, a high which is higher than this previous high. Now we wait for it to pull back down and give us confirmations to go up. Okay, so that is the area we're going to be looking at right here. Okay, we're going to be looking at this area. Okay, so when the market pulls back down from this high, after it's broken that high, it pulls back down. We're looking for confirmation candles around here, rejection wicks and all that. So in this area, we'll see that there is a very big rejection wick here that shows that the momentum is still going bullish. Okay, so after this rejection, just wait for another big bullish candle, a big bullish candle. You can take a trade on this big candle, but it would preferably be this next one right here. Okay, you take a trade on this big bullish candle. After this rejection, there's a bearish candle, then there's another bullish candle, which is an outside candle. It's actually engulfing this previous candle. So you take a trade here, your stop loss below this wick, and then you're targeting a 1 to 2, something like this. Okay, now some of you will say you're showing us that in past data and hindsight. I'm showing you this so that you can go and practice this. This works on a live market because this is the strategy I use every single day and every single month to make money and make profits, guys. Follow all the rules. Now this is for a bullish trend. Now I want to show you where we will get like a reversal. It would be better I show you where we get like a reversal. Okay, but before we look at the reversal, let's look at the bearish trend. Here we see the market going lower low, lower highs. Okay, it's going lower lows, lower highs here, right? At this point it reverses a bit, but the general trend is going down. Okay, so here you can see that this previous low is broken by this big bearish candle. Okay, and then we wait for this pullback. This pullback is where we're going to be looking for entries. Okay, so let me show you after this break of structure right here. Okay, this is now a bearish trend. This candle breaks this structure. You don't just enter after that candle has closed down here. Okay, that will be a very big stop loss and it will be a very painful trade. All right, don't do that. Wait for a pullback near or towards this. Okay, so this pullback comes and then it gives us this big bearish engulfing candle. Okay, you can see this big bearish engulfing. That is why you can take your trade, or you can take even after the third candle. Okay, like this, and then your stop loss at that previous high, and then you target a 1 to 2. This is how you trade. You trade only when there is a pullback. Don't trade if there is no pullback. Wait for a pullback always, okay? So this is a scenario for a sell. I want to show you an example with a reversal pattern. Let's look at this place point here. We had here market creating highs and lows, higher lows right here, higher highs, equal lows, lower lows, equal lows. Okay, and then here the market broke structure with these wicks. It broke this higher low, and then the market started going down. So that's the area where we're looking for reversals. Okay, I'll just show you a bearish reversal, then the bullish reversal is just the opposite of this. All right, so let me show you this. So this area right here, when this market structure is broken, okay, you see here, these wicks here, this wick here breaks that structure. This wick breaks that structure. So you wait for a pullback, okay, so that you can enter on a sell from a bullish trend, right? This was a bullish trend, okay? Now you are going to wait for that pullback up so that you can enter into a bearish trend. Always wait for a pullback. A pullback is what gives you confirmation for you to get a sell entry or a buy entry in a reversal. So here we get the pullback up, and then we now look for bearish confirmation candles. Okay, bearish confirmation candles. Like here, we get this big engulfing candle, very big candle here, which can signify to us that the market is now going to continue lower. We take a trade there, a stop loss above previous structure, like here or here, okay? And then you're going to look for a 1 to 2, something like this, okay? So guys, I don't want to make the video too long. This is the strategy that I use to make money every single month trading Forex. If you implement this strategy, guys, it's going to really be beneficial to you, to change your life. It will make a meaning in your trading. Remember, guys, if this has brought you value, please do leave a like on the video, subscribe to the channel, and also give me your comments down below. Go and join the free Telegram channel. And also, if you want VIP signals, send me a WhatsApp. The signals cost $35 every single month, but they have at least an 80%, 75 to 80% win rate, which can make you a profitable trader. Thank you guys for watching. Until next time, peace and out.